Hello and welcome to Bloomberg Quint. I'm Vishwanath Nair, bringing you some latest developments in the banking and finance space. Now, Lakshmi Vilas Bank and Indiabulls Housing Finance have just announced a fresh merger. The private sector bank and the housing finance company will have a total net worth just shy of about 20,000 crore. Now, according to Lakshmi Vilas Bank's release, the merger is, of course, subject to regulatory approvals. Joining us on the phone line to take us through the contours of this deal is Ajit Mittal, the Executive Director at Indiabulls Housing Finance. Mr. Mittal, welcome. Just wanted to first start off with the obvious question. Now, previously, Indiabulls Housing Finance had applied for a banking license to the RBI. Can this be considered sort of a backdoor entry now into banking?
Absolutely not. I very, very emphatically deny that. It's the most transparent, upfront manner. Coming back to 2013, well, there were 27 applicants for the banking license at that time. We were just one of them, and only the two got. That doesn't mean the others were not found fit or proper. Having said that, a lot has changed between then and now. Now we have a very, very clear framework for the new private sector banking license on tap. We also have guidelines for facilitating mergers between non-banking finance companies and the banks. And we, in true letter and spirit, we qualify under all the parameters, under both guidelines for the new banking licenses as well as for the merger process.
Right, Mr. Mittal, just a point about what the combined entities shareholding structure is going to look like, and how much is the Indiabulls Group going to own in that?
Well, just on my back-of-envelope calculation, of course, these are a matter of details, but post-merger, Indiabulls Housing Finance would be a little more than 91.5% of the combined entity.
Sorry, 91.5% of the combined entity is only going to be Indiabulls Housing Finance.
Yes.
Are you talking about the loan book or are you talking about the shareholding?
I mean, I can be half a percentage point here and there at this point in time, but the swap ratio is for each share of Indiabulls Housing Finance, it will be 14 shares of Lakshmi Vilas Bank.
Sure. Okay. Sorry, we understood it the other way around, but
so we get diluted to the extent of close to sort of 8.5% to 9%. That's the
right. But the combined entity is still going to remain a bank, right?
Absolutely, absolutely.
Okay, and you will be the majority owner of that bank.
Yeah, absolutely.
Sir, just to get a sense of how exactly the RBI is going to look at it, because it has not allowed housing finance companies or NBFCs to hold a majority stake in any bank. I mean, 10% is the limit that the RBI has set.
Well, it's not a question of holding a majority stake. This is a voluntary amalgamation process which is duly provided for under RBI's own directions, both master directions as well as also the eligibility norms laid down for the grant of licenses, new licenses in the private sector. So there's no question of holding stake beyond a certain percentage. It's a voluntary amalgamation through a court-approved process, NCLT process, and RBI has very, very comprehensive and clear guidelines for this process. And as I told you in the beginning, we fully meet all those guidelines. Otherwise, there was no point even walking this path.
Right, fair enough. How confident are you of getting this RBI approval, because that is crucial still for the merger to actually take place, right?
Absolutely, we understand that, and we are definitely constantly in touch with all the stakeholders on this. Going by the criteria, we are anyway a predominantly financial services player, and RBI's guidelines are very clear that those business houses where 60% of the income, at least 60% of the income and assets are from the financial activities, they are fully eligible. So we are, absolutely very comfortably placed in that respect. Plus, we have a very proven track record of lending to small, medium enterprises, to retail, borrowers. We are the second largest housing finance companies. So across the spectrum, a very wide array of financial products we have been, distributing, not just in lending space, but also in other activities. We have a mutual fund, or we are also entering into insurance. So we have a very proven track record of financial services for more than 15 years. So going by that, I guess we should be, given due consideration for this.
Fair enough. How big is the real estate financing as well as real estate business for Indiabulls? Because often the RBI does not look at this business very kindly, and therefore do you think that could probably place a stumbling block for this deal?
No, I'm glad that you asked this question. Well, first of all, nowhere has it been sort of categorically stated that real estate is totally a no-no for RBI. While I do understand there is a concern, a bank and a group company having having real estate business, but in our case, as I told you in the beginning, we are a predominantly financial services business house. We are not an industrial conglomerate in that sense of the word.
Sure.
Secondly, real estate is just a very tiny fragment of our total business, both in terms of revenue as well as in terms of asset. Back in 2013, probably the story was a little different, but now, while the financial services business has been growing exponentially, the real estate business has not really grown. On the contrary, we have shrunk our assets. As you might be knowing,
how big would it be then?
Pardon?
How big would it be in the overall cost of business?
I am involved more on the financial services side, so
sure.
I won't be able to give you a very off-the-cuff calculation, but then it's very insignificant and very small, very trivial as a percentage of our total business. Secondly, the more important thing to be looked at is, well, just because, it's a part of the broader overall umbrella group, it should not be construed that it's part of the same group. Well, financial services by itself is a separate group. Both the companies are separately listed, separately managed with separate set of shareholders. What is common is probably a brand name. Other than that, there's nothing. So there's a complete Chinese wall between the group's real estate business and the financial services business.
Okay.
And going forward, this can be even further, segregated to give comfort to the regulators if need be.
Fair enough. Recently, you made an announcement. Indiabulls Housing Finance made an announcement of raising about 26,000 crore from the market. Now, the market is doing well. People are raising funds. We've seen NBFCs and housing finance companies come to the market and raise funds. But then, if that was the case, then why do this deal? Or if you were planning to do this deal, then why raise those funds?
No, you have to appreciate that this is a long process. There are multiple regulatory approvals required. There's a court-approved NCLT process. All this can take up to a year.
Right.
So in the interregnum, in this period, there has to be business as usual. Our housing finance business is pretty robust. So it's not as if we're going to stand still in the period. We do need liabilities to keep growing. And so that's a good diversified source of funds for us to tap the market.
Fair enough. Recently, we've seen a spate of deals within this space between banks and NBFCs. But of course, yours is more significant because it's an NBFC taking over majority shareholding in a private bank. How do you see this deal? How do you see the synergies playing out for Indiabulls Housing?
Well, there are tremendous synergies, primarily from the standpoint of Indiabulls Housing Finance. We'll have access to cheaper, sort of deposits, cheaper liabilities, and more long-term sustainable source of liabilities, as opposed to wholesale liabilities, which are, slightly volatile, given the, we have episodes every 5 years, 6 years. So that kind of thing is permanently taken care of. Secondly, this bank, in the case in point, Lakshmi Vilas Bank, has a very good retail franchise. It has about 567 branches, more particularly in South India, Tamil Nadu, Karnataka, and also partly in Western India, whereas Indiabulls Group has very strong presence in North and West. So it also provides us a very good geographical diversification, as also a very good retail network, and build a long-term retail franchise. Also, given access to cheaper long-term sources of funds, our spreads are also going to be better.
Okay, fair enough. Now, you mentioned that the gross NPA ratio is about 3.5% of the amalgamated entity. Currently, Indiabulls Housing Finance is operating at what on the gross NPA level?
Our NPAs have always been, south of 1%. Gross NPA, I'm talking. The net NPA are currently around 0.5 to 0.6%. I don't have figures right now in front of me. Of course, the bank, Lakshmi Vilas Bank, does have higher NPAs. Partly, they've been, struggling with the asset quality in the last couple of years. But for the combined entity, this shouldn't be a challenge. And given our track record excellent track record in recovery, collections and all, even that is going to be obviated to a great extent. So the asset quality is again a very, very big factor from the standpoint of Lakshmi Vilas Bank. It will immediately give a very strong impetus to our asset quality, capital adequacy, also the net interest margins, all the parameters, financial parameters would definitely show a very strong improvement.
Fair enough. What's the timeline you're envisaging for this deal to actually get close if all the regulatory approvals are in time?
Well, I would not really hazard a very, pointed sort of a time frame for this, but I guess it should be 9 months to 1 year, to be fair.
Okay. Recently, we've seen a spate of housing finance companies facing a considerable liquidity crunch because of the way the market played out in the last 6 months. According to what this presentation that you put out on the website on the stock exchanges, the capital adequacy ratio of this combined entity is going to be about 20.6%. Any need for funds in the near future once this deal is actually closed?
Well, not immediately. As far as capital is concerned, we are very adequately capitalized. And LVB also has recently gone for a QIP. You might have known they raised close to 450 crore.
Right.
So with both the entities coming together, I guess they'll be very adequately capitalized. It's not just a question of capital adequacy; it's also a question of capital efficiency. So we got to be better efficient with how we deploy our capital. So we'll raise capital incrementally as and when the business growth really justifies. For the time being, I don't envisage any need for capital raising for the merged entity.
So that earlier guidance about 26,000 crore that we're talking about, that is not going to happen for now.
That's capital. That's the debt capital.
I was talking
debt capital.
About equity
capital. Yeah,
sure.
Those are funds. I mean, that's like working capital. So time to time we do tap into it, partly to replace the existing liability, partly to fund our growth, partly to fund our loan growth. All that will continue, as usual.
Fair enough. Thank you so much. Yes, sir. Yes, you were saying something?
No, thanks a lot.
All right. Thank you so much, Mr. Mittal,
Bye-bye.
for joining us on Bloomberg Quint. Thank you so much for watching.